Hey, it's Andreas. Let's talk about what's been going on with Hoegh LNG partners. Now, in the past week here, we can see that if you only look at market hours, the stock was up by 36%. But if you look at after hours trade as well, it was up by more than 40. And LNG has actually been in the news on the front page of Bloomberg in the wake as a consequence of the Russia-Ukraine conflict and the energy agreement between Europe and US. And this has been pointed to as one of the reasons of the surge in stock price for Hoegh LNG. And I also believe that a credit event is root cause of the surge in stock price. I will cover both of those in those videos so that you are up to date on what's going on in this stock. Now, share price, $6.46. I just put in earnings power here for the company for your reference as well. So you can see that in the past 12 months, Hoegh LNG here earned $1.33 a share. So earnings to the actual price of the company gives them a great valuation here with the price to earnings ratio below 5. And in the past, they used to pay out 88 cents a year in dividend, but due to legal obligations, they only pay out 4 cents a year with current, liabilities that they have. And this gives a yield of 0.64%. Now, if dividend were to be reinstated, yields would be a lot higher. All right, let's talk about the LNG headline in the news. This was the main page of Bloomberg. All right, that's crazy. I've never seen this is a fossil fuel, although it's the cleanest of all the non-renewables, and it's in line with European climate standards. So this whole Russia-Ukraine conflict enables Europe to try to reinvent their energy dependence and step away from oil and coal and be more reliant on something that burns a lot cleaner, like liquid neutral gas. So the summary here is that the US and the European Union will boost supplies of LNG to Europe here. And this is by the end of this year. However, no substantial legal agreements. There's been no words on paper yet. This is only guidelines. And I don't think that we will see a big change by the end of this year. Neither does the journalists here on Bloomberg. I think we will have to wait until 2025 until we actually see results here. We can see that demand here is huge from Russia. Just look at this number, 40% of Europe's need with the Russian gas. That's a huge part of the energy dependence for Europe. And if we just start shipping some liquid neutral gas, it's going to make a little dent, but it's not going to be huge. However, we see these steps. We see a finger pointing towards a different future here. And there will be competition because you can see that a lot of Asian buyers here are also competing with the Europeans. So we will have to pay a premium here to be able to have these charters deliver liquefied natural gas to Europe to do this rather than deliver to certain Asian buyers. And I think that we will also see a lot more shipbuilding with liquefied natural gas carriers being needed and more in demand as the needs, the world's demand for LNG increases. So basically, the summary of all of these Bloomberg news that affects stock price is that looking at the sector, the potential for growth has increased a lot looking into the future. Rather than growing by 2% a year like it was in 2020, then no, we see a lot better potential future there for further operations and expanding more carriers, and this is good for companies operating in this sector. We also have a press release here from Hoegh LNG on the 24th that there has been an amendment to these bonds Hoegh LNG 03 and Hoegh LNG 04, and that a credit event has occurred. Now, what does this actually mean? I did some hardcore googling here to find this. Believe me, this was not easy. Smash the like button for this one. So I found the bond terms in a deeply it was very hard to find this one, but here you see the amount outstanding for the bonds, and we see the proposed amendments, and I'm going to cover this on a very high level. I will also leave a link to the full report, so if you're well versed in legal and this very difficult language, then you can read the full report for yourself, and then please comment your opinion on this in the comments below. But basically, a credit event has occurred as defined in this section of this PowerPoint slide, and what this means is it changes permitted distributions. Now this is dividends. So as I told you earlier, they were only allowed to pay out a cent every quarter, so 4 cents a year with legal obligations. Now, no dividend until a credit event has occurred. All right? And remember what the press release said? As a consequence, a credit event has now occurred. Now, in my opinion, this believes that it's very likely that we could see dividends become reinstated, and I believe that dividends will act as a catalyst for an even greater increase in stock price. And I believe that a target, when I look at this company, is 15 American dollars per share. I think that that's reasonable given the potential yield, given the strength of the balance sheet, given that credit has been more secured. And looking at my own actions that I will be taking, because this has been the largest holding in my portfolio, in my case, I will apply a hold to this company, and I believe that it will outperform the current market in the short term. So my actions will be just to hold on to my shares, and then hopefully when dividends becomes reinstated, then I can use those dividends to invest into more exciting growth companies instead. That's been my thoughts on the week for Hoegh LNG and what the week it's been. I hope you make a ton of money whatever trades you decide to do. Take care now. Bye bye.